Ring the bell. What's up? What's up? What's up? Happy Friday, ladies and gentlemen. This is Dr. Greg from Elite Traders University, and so good to be with you here on this coffee hour for this Friday, uh, November 11th, November 14th, 2025. So good to be with you here today, and we are going to have a great show. We're going to go over my forecasts in the markets. A lot of people really love that for the forecast last week. A lot of people said spot on. They had a bunch of money. And like I said, my name is Dr. Greg McLeod. I've been doing this for over 30 years as a Wall Street analyst and one of the world's largest Forex brokers in the world. And also I have a school called Elite Traders University, helping people become professional traders in 90 days using my proprietary technique. And it's so good to be with you here on this Friday. And we're going to go ahead and look at the markets for bulls versus bears, weekly market forecast, and a big happy Apollo 12 launch anniversary. To the moon we went, and I was a little kid when that happened. And also great for the government shutdown is over, which is wonderful as well. So that's something to celebrate about. A lot of people able to get paid. That's all about is getting paid, and I tell you what, if you are worried about job security, income security, once you take matters into your own hands and learn how to trade the markets, and I am qualified to teach you with my vast record knowledge working on the inside of the market, and take control of your life and not rely on the government or a company or the fickleness of customers and things like that. Have a backup plan, a plan B, and a plan B involves learning to trade the financial markets, where you can just, with a Wi-Fi connection, a laptop, or a phone, just be able to tap into the $6.1 trillion Forex market, or the billions of dollars being traded in the NASDAQ and the S&P every day. And I can show you how. And you go ahead and click the link below and book a breakthrough strategy call. We can talk about how you can get off the government teat, or get off the teat of your corporation, and become financially free. Okay. Okay. With that, let me just go ahead and say a big hello to howdy do to Sean. And Sean, long time graduate from Pip and Run. Also, John, nice to have you online as well, and all the other VIPs who are watching and on our school group. Let's go ahead and get into dive into what's going on here. And let's go ahead and reading view. Let's go ahead and make sure my screen, and we can get this shared. Sharing is caring. And if you can hear my voice, can you type the number 1 in the chat box? Let me know that I am talking to people and not talking to the thin air. Awesome. Number 1, if you can hear me. Okay, great. And then you can see my screen. Type number 2. Okay, we just limited out our gold trade. And we'll only take a couple of live trades to show you what we do at Elite Traders University as well. But welcome to Elite Traders University presentation of weekly Forex forecast, bulls versus bears. Yeah, my name is Dr. Gregory McLeod, and I'm a Forex trader. I'm also a former Wall Street currency analyst, and I'm also the founder and CEO of Elite Traders University. Elite Traders University, we give you all the tools and all the technology and the knowledge to extract thousands of dollars out of the market in a matter of minutes using my proprietary pip and run approach. Okay. Anyway, here's a risk disclaimer on your screen to make sure you understand all the risks associated with foreign exchange trading. So good to be with you here, and a very happy Friday to you. And like I've been doing this for 30 years, and one of the authorities on short-term day trading called Scalp. I've been doing it for close to 30 years, over 30 years, in fact. And so I'm glad to be with you here and to share with you what we're going to go over some things. But I also want to tell you about a book I've got out. I've got a book called The Gold Rush Blueprint. Gold Rush Blueprint is a book I wrote on how to trade gold, and we have been crushing it with gold lately. And so you can gain early access to this We have the Gold Rush Blueprint. We have templates for TradingView. Also, 3 systems are inside that. So go ahead and scan that QR code if you're interested in purchasing the Gold Rush Blueprint for the Black Friday sale. Okay, our agenda. Let's go ahead and look at the. We're going to look at the dollar index, the euro, the pound, the Aussie dollar, dollar yen, dollar CAD, gold, silver, and oil S&P 500, and economic. We'll start with the economic news and the fundamentals, right? So I always want to always start with that. And we're going to use our tool. One of my favorite tools is my market heat map. It's the arrangement of currency pairs by percentage change. It tells me what's hopping, what's popping, what's dropping, what's not in the market. And you can get access to that absolutely free by going to mymarketheatmap.com and go right to the front and scroll down to the bottom, and you'll see this wonderful tool. And if you like it and you want to unlock all the benefits of My Market Heat Map, you can just go ahead and you can subscribe for $19.99 a month. Okay, so green is an uptrend, red's in a downtrend, and gray stay away. And we can look at our. This is one of 6 powerful heat maps that we put on the front page for you, absolutely free. And we can see that Kiwi dollar, Aussie dollar at the top of the heat map, right? And those are usually our risk-on currencies that usually go up when the U.S. stock market is up, right? And we also look at our economic calendar. Economic calendar, you might need to refresh the screen and press the open button in order to get access to show more. And then we can see some of the economic news that we can look at for the. And since this week is almost over and the government shutdown, we haven't gotten any of this data because of the government shutdown. That's why you get the question marks there. Other currency news, we've got GDP rates. The gross domestic product growth rate year on year was up for the Eurozone 1.4%. That might have been positive for the currency. Better expected results for the value of the currency. Let's go ahead. We're going to look for next week. This is what we're in the week starting Monday, November 15th. And we have some data. We have ECB Windows speech, high impact item. The euro will be in play. I call this fun with flags. I think it's very important. It's very key to technical analysis to actually look at the fundamental backdrop, because that's what everyone is looking at. Think of in Trading Places, the crop report where Dan Aykroyd and Eddie Murphy were trading frozen concentrated orange juice. And the big anticipation was getting a hold of the crop report. And Clarence Speaks has the folder with the news. And at 8:30 a.m., everyone's looking at the market. Well, that event happens every day at 8:30 somewhere in the world, right? And so we can look at the flags and see what currency that we want to actually be trading or looking at that will receive the most liquidity and activity. We want to trade when there's people trading and have interest, and the economic calendar is that interest. So we can see that we have U.S. Empire State Manufacturing, Empire States, New York. That's it. And then we see 10.7 is the previous number, and the forecast number is 6.1. So we expect a drop. And usually, if there's if it does happen that way, the actual number is at the top, actual forecast and previous. We're waiting for the actual number to be released. Well, then that could be negative for the currency, cause the dollar to drop, cause the euro to rise. The euro is called the anti-dollar. We can actually see that. Now we can go to the technical picture and actually look ahead and look at the the charts and actually see big money taking positions, because they already know what the answer is. The game is rigged. The game is fixed. Okay. Clarence Speaks is for real. Information is, as Gordon Gekko said in Wall Street, the most valuable commodity I know is information, right? Read Sun Tzu, The Art of War. Every battle is won before it's ever fought. So people already know what these numbers are. In fact, you can go to Thomson Reuters and actually pay extra, pay to play. And if you pay extra, they will give you the actual numbers ahead of time if you're able to pay, right? So, I mean, and a lot of people don't believe me. I always say, keep the article where they actually have the ad where you can actually pay extra to get the information ahead of time. And that is, it seems like it's unfair, right? It's extremely unfair. However, that's what happens when people have access to the to money. And but let me see. So let's go ahead. So a lot of Canadian data is coming out, right? So we can look at the CAD, USD, CAD, CAD, CHF. Inflation rate year on year, very important. Inflation is supposed to be unchanged, 2.4%. CPI trend mean basically unchanged. It's going to be a little bit lower. Core inflation rate stable. And so, if inflation is not going up in Canada, it's probably going to be weaker Canadian dollar and stronger currencies versus the dollar. So CAD may continue in its downtrend. And then we have later on where I trade Asia session. RBA meeting, and we're going to be looking really closely at this. We had tremendous job growth in Australia based on their numbers. It was like the previous number was 20,000. It came out at 42,000. We saw a giant outsized move, almost like a 50 pip move in Asia session on the Australian dollar currencies. On a news release, right? I haven't seen that in a while. So Aussie is showing a lot of strength. See if that strength continues. Though it is in a downtrend, so you can have a downtrend in currency with positive economic news, but the overall trend is still bearish. But it could be hammering on the bottom and maybe switching around, right? All right, so let's go ahead and go down here to Tuesday. Okay, with the meeting minutes, we're going to have more Aussie data. We're going to have wage price, the wages, and then we have core inflation. We have UK. So the UK is going to be in play too. The pound dollar, pound yen currencies on Wednesday. So this is what, and you can see this is like a super Wednesday. They used to have something called Super Thursday where UK will release all this data on Thursday. Now they're releasing it on Wednesday. Core inflation rate year on year. Supposed to drop from 3.5 to 3.4. Core inflation rate on month is supposed to rise from 0 to 0.2. And inflation rate year on year is supposed to drop from 3.8 to 3.6. And the inflation rate month on month is supposed to rise from 0 to 0.5. So not so much going to get caught up in the weeds with the numbers unless there's a really big surprise like we had this week, where the actual number and the forecast number are like totally outsized. Then that creates a repricing in the market, because the market is a discounting mechanism, meaning that all information that's gathered is already priced in, right? So unless there's something completely out of whack, where then the market has to price in that new information that it didn't have before, right? Now let's go ahead and move on to, we have a lot of euro data coming out too, so we can transition if we're trading the pound on Wednesday later on in the evening, or later on in the morning, which is the evening Asia. We're looking at the core inflation rate, the eurozone, lots of eurozone data. That basically seems to be unchanged to flat, but the euro will be in play. And then we'll look at the U.S. housing data. Now, a bunch of question marks. It's all tentative because we don't know how fast the government can queue back up after being shut down for over 40 days. And so we can see that all the existing home sales, jobless claims, and things they have question marks by them. This is all really big data. And I would actually look to the euro to trade this data if it does get released. But again, we don't know if the government's going to be fully operational. They have to, they've been basically shut down for 40 days, and they have to do a lot of catch up and actually do all these computations. So they're behind. So we'll see if they actually catch up. We do have inflation rate data out of Japan, so the yen's going to be in play. And then on Friday, we have more UK data again. So the pound should be very much in play. If you see a currency pair that's flagged that shows up multiple times during the week, it usually is a good indication that that currency is going to be the focus for many traders, many trading desks, many hedge funds are going to be focused on that currency. And so that's where the liquidity is. That's where the big boys are playing ball. That's where the party is. And so maybe we want to spend a little bit more time on analysis of the pound. Okay. All right. Moving right along. Let's go right and say, okay, Greg, I'm tired of this. Let's get to those technical levels. And let's go ahead and move into that. Okay. I actually wanted to show you another part of my market heat map. I'm going to log in. And, analysis happens on many different areas. You have technical analysis, you have fundamental analysis, but you also have sentiment analysis. And sentiment analysis usually looks at people who are looking at the order positions, how people are positioned in the market, right? And so when you have people who are excessively long or short, then what happens is you have these very extreme moves, right? So you can look at the instrument. Let's say we're going to go to a currency, and we can see where if people are very much long a currency, it's usually an indication that we're at a market top, right? So we can see, and if it's well balanced, like 50, for instance, this one is 74.27 people, percent of the people are short or long the South African rand, and only 25.73 are short, right? So this would indicate that we would look for shorting opportunities in the South African rand. Why? Because losers pay winners, and usually there's more people who lose than win, right? 90% of all traders lose. So there's no way that these people are going to get paid, right? so we kind of game the system, right? So here's the pound, and this is GBP, and you usually take it against the dollar. 66.57 people are long the pound, versus 33.43 are short. If the imbalance is greater than 60 or 70%, I would look at for shorting opportunities. Again, I would look at sentiment in cooperation or in coordination with technicals, right? I'm going to look for my technicals to support. I'm going to look for key levels, key support and resistance levels. And I'm going to look at, well, hey, if everybody is long the pound, and I'm seeing some bearish chart formations, or some type of fake double bottom or something like that, I might go ahead and look for, I have some intel that's giving me maybe that one piece of data that's going to commit to the short side, right? Especially when everyone is maybe buying, right? Here we have almost even balance, 44 to 55 on the euro, kind of evenly balanced, can go either way. But I'm looking for extremes. Here's Swiss franc, where 28% of traders are short, and 71% of the people, 20% of the people are long, and 71 are short, right? So that might be a dollar Swiss, and going short dollar Swiss, or maybe going short pound Swiss, right? Where the Swiss is very much shorted by the majority of people, and losers pay winners. There's more people here on the short side than the long side. So I would rather be on the long side. But again, I would look technicals to do that. So many brokers have this type of information where they have these order imbalance. They call them sentiment, SSI. Here is the Australian dollar. 61.31% of people are short, while 38.69% of the people are long, right? And this is not democracy, right? So we don't see, majority doesn't rule. Just because 61% of the people are short probably means that losers are going to pay the winners, and there's fewer on the other side here, 38.69. So you want to, again, this is just, I don't use sentiment to as a single signal by itself, but it helps to keep that in the back pocket, that if you're trading Aussie dollar, hey, maybe that big employment number we saw earlier this week, maybe there's something bottoming. We're bottoming on the Aussie dollar, and it's turning around while people are committed to the short because of the trend. But the internals and fundamentals are lining up where people are actually lining up on the long side. The smart money is usually smaller than the dumb money. Okay. All right. Makes sense? All right. Give me a one in the chat box if you found that useful or helpful. Let me know. Okay. Go ahead. I'm going to go ahead and go right to our technical picture. If we can find, okay, I move this over here. And no, I can say right here. We're going to trading view, and we'll go there, right? And we'll launch super charts, and they're having a big the big sale or something coming up soon, where we can get there, right? So I'm just going to go to a single chart. We use 3 time frames, multiple time frame analysis when we're trading, but we're going to do some analysis today. So we're going to use a single chart display here, and we can remove our, and then there we go. Okay. And we're going to start off with the dollar index. The dollar index is key because it's the major currency pairs are traded against the US dollar. That's why they call majors. I'm going to remove all indicators, remove all drawings. How about that? Right. We'll keep the indicators. How about that? This is this channel indicator is very interesting. You can get it by going here to indicators and go to adaptive trend finder and click that. Julian Etch, cool guy. Thanks for programming this great indicator. And it's absolutely free. Click that, and it creates this wonderful trend channel. I used to draw them myself, but now I don't have to. I have the 200 moving average here, and I've got some smaller averages here. But this is the monthly chart of the U.S. dollar, and after coming down to the bottom of the channel, we have been rebounding. Right, nascent little uptrend there. Right, coming off the bottom there. And so this is our 50,000 foot view of the market. Dollar seems to be in strong. Let's go ahead and go to the weekly chart. Weekly chart, we can see that for weeks, 1, 2, 3, 4, 5, 6, 7 weeks, we have had some outsized, some gains in the US dollar. The dollar index, again, is a basket of currencies versus the US dollar, and heavily weighted are the European pairs against the US dollar. And we can see that we have an inside day, which is a little bearish candle formation here on the weekly. And I'm using Heikin-Ashi charts. I love Heikin-Ashi. Greg, your charts look weird. Yes, but they give us a strategic advantage. And if you want to learn more about those, book a call with me, a strategy call. I can tell you more about that, how we use it to extract tons of money out of the market. Because you imagine sell, buy, buy, green. Keep it really simple, unless you are colorblind, and then that's a whole different story there. If you're colorblind, I actually had lunch with a wonderful student, Jay, who says that we were wearing the same pants. He wore green, and I wore green. I said, "Oh, you got green pants like me?" He goes, "These are black." Like, no, they're green. And he goes, "Oh, that's right, I'm colorblind." So he thought they were black pants, but he has his colors. He has red and blue candles because of his color blindness, and so you have to understand that. But for me, I drive. My vision is perfect. Green means go. Red means stop. Okay. Anyway, I want to show you this article. Free markets, fair markets, Thomson Reuters response. Details of tiered release of this data are provided openly to Thomson Reuters customers and the wider public, and anyone wishing to trade on this data can pay for the service that best meets their data needs. Okay, so this is where you pay to play, right? If you want to get that instant, if you want to get data, news data ahead of the markets, you can pay Thomson Reuters and get it ahead of time, right? Doesn't seem fair, But hey, that's why we have the predictive index and indicator. We have our way of pip and run way of dissecting the market, and gives us an insight into the market, being able to use institutional order flow to see when the markets are changing direction. Right. All right. So daily chart, we can see that doji we saw on the higher time frame is a series of pullbacks against the trend, right? And we're coming against a trend line. We have a trend line established by 2 points. 2 points make a trend line, right? We have 0.1 and 0.2. We would like to see a third test of this line, or the next test would be the next point on the line would be a test. We could draw one across here, but we actually broke it. So this is our new line that we've drawn, and we expect, if we get prices of a break above 99.49 on the dollar index, we could see a substantial move downward for the pound, the euro, and the other major currency pairs, currencies versus the U.S. dollar, especially because they're talking about maybe cutting rates, the ECB cutting rates, and the Fed seems to be like keeping rates on hold, which would give us an interest rate differential a favorable interest rate differential versus other countries who probably want to undercut our tariffs by weakening their currency. That's one way they can get around the tariffs on a broad sense by weakening their currency. It makes their products cheaper, and we collect less tariff income. But that's supposed to be it could be a little bit of an offset for them, right? So that would and this would boost the dollar, right? And so it might be a net effect, right? So we can see our rebounding from here at the 99.34 area. Okay, so bulls versus bears. We can see that we're short term or medium term bullish on the dollar index. Okay. And so we're looking for a bounce. So bullish. Okay, let's go to the euro, the anti-dollar, EUR/USD. Let's keep it going, keep it moving, keep it spicy. Monthly chart. Remove all the drawings here, and let's get to it. And we can see that we have a downtrend channel on the euro, right? So it's just the opposite of what we saw in the US dollar. Lower swing highs, lower swing lows. You can see the structure. We're at the top of the channel here again. The 115.66 area, right? The 200 simple moving average. This is like a key reversal zone, right? When we got close to this area, right, we could probably see some type of a drop back into the channel, right? Also, we're at the 100% expansion of this ABC, right? So usually these ABC equal waves will turn back with price coming back down hard back into this into the channel, into the midpoint. Say we had a midpoint of this channel here and just bisect it and say, well, look, we bisect the channel, maybe somewhere in the 103 area, we can see a pullback in the euro. So we're bearish the euro. Sell. Yeah, that's what we're looking for, right? Those are the sound effects we use during our trading. It's had a courtesy of Mr. Jim Cramer. All right, let's go down to a weekly chart, and we can see, we have an upward channel on the weekly. But we're down below the moving averages, and maybe a target of maybe 110 may be a little bit more doable in the near term, right? And we can even take a Fibonacci on that swing from the low we had on January 6, 2025 to the high that we saw in July of September of 2025. 38% retracement takes us to 112.49. 200 simple moving average on the weekly takes us to 110.62 or so, right? So again, we are bearish the euro. Let's go to the pound. Let's go move all the drawings, go to the monthly and go to the pound, GBP USD. Okay. Pound dollar, affectionately known as cable. And we can see that we have our monthly trend channel is actually up. We had our King Charles, the death of the Queen, and see that they took the pound down as a deference to the Queen, and then we had this King Charles rally that we had after he was crowned. It's a perfect sequence of timing of how they use the currency markets to salute their monarchs, right? So we've got this move down, but I see this. We go down to weekly, and it's like we have maybe a upward trend channel bias but we are going down within an upward trend. So this is what throws traders off, right? They say it's bullish is in an uptrend, but within the uptrend there are downtrends within the uptrend, right? So the whole idea is timing this and knowing when you are in a uptrend and when you are in a downtrend, and when does this higher time frame trend kick in, right? Because this is going up, but if you bought anywhere here, you're a loser, right? So the trend is not always your friend if you don't know which friend you're talking about, right? So here's the weekly pound, and we're seeing that we are approaching the 200 simple moving average, 129.15. Could be a support. We're also a bottom of a channel, a trend channel that stretches back from 2022. So it's like a 4-year trend channel. And even though we're not, when we touch the edges of that channel, we rebound. But even within it, we still move very close to it, turn. We're very kind of close to the bottom. We could turn again. Get a break above 32.50. Look for a move back up to 37.92. But that's a really big, we're not going to probably hit that in a week, though. Let's drop down to our daily chart. Daily chart struggling against this, like shades of gray double top, right? And so we might get a little bit of a pullback, right? If we can break 32.12. 32.12 is a breakout point. I'll be very bullish the pound if we can get above the 200 simple moving average, because that thing could stop it cold, 32.65, right? But using a little bit of Elliott finesse, I'm thinking that this will be some type of a little A, B, and C move, right? As long as we can hold the 1.30078 area, we can hold above that area, then we have a good chance to rebound, maybe all the way back up to the 37.60 area, right? But we do have a lot of UK data coming out, and there's lots of indecision here on the daily chart, 4-hour chart. There's a lot of little zigzags here, right? But we're not really like dropping really negatively. We're at the top of this channel, so we might get a little bit of a pullback. I'm looking at maybe a rise higher, right? The 4-hour channel is bearish, right? So we might come back and tag 130, right? Maybe a double bottom and maybe launch back up, right? But it's really struggling here. It's below the 200. It's in a downward trend channel. The dollar is strong. And so we have lots of data coming out, though. Okay. So I am short-term bearish, medium-term bullish. So I get a okay. There we go. Let's go ahead. Let's keep it moving here. And let's go to AUD USD. A lot of very good data coming out of Australia regarding the jobs. And we could probably see that spike we had. You probably won't see it in the monthly chart. But see, we're kind of a holding formation. We're in a downward trend channel on the monthly, but within that channel, there are uptrends within that market, right? There are rallies. If you shorted this, you lost money. And, if you shorted this, you lost money too, right? So the key is to look at areas like where we have resistance, resistance trend lines within the channel, right? And we've rebounded off this area here, 66.96, which is a high we had on September 1st, and see if we are moseying on down to retest support, right? We go from support, it's like Pong. We go from support to resistance to support to resistance, kind of a descending triangle, right? Let's go to a weekly chart. Weekly chart, the long wick here is extremely bullish because they try to push price down to the 59.13 area back in April, and then the bulls jumped in and bought it and pushed it higher, right? And rallied it strongly into the 200 simple moving average, where we got rejection at that 200 simple moving average. The 200 simple moving average is one of the most widely watched technical indicators, and we see that price pull back from there strongly and found support in the 64.30 area, right? So we have this kind of support here, maybe a higher low. We have a higher low than the previous lows, and so maybe Aussie is poised for a breakout, right? This trend line is strong, kind of wacky, right? We broke that line, and then we have this one right here, right? So this is our new trend line, and we have this line here, and we're moving sideways where we're not getting a lot of sell momentum after the rejection here, right? We just came back to some old support. So that's telling me that there's still the buyers are still in the market. We're at the in between the 23 and 38% retracements, but we have sideways consolidation, and maybe the news that comes out this week maybe breaks us out of this sideways consolidation, right? Based on trend analysis, I'm slightly bearish, right? But because it hasn't given up the ghost yet and retested the 59.08 area, I think if we could get below 63.91, I'd be bearish for a retest of the 59.15 area, right? With the dollar, we got dollar strength, so I am bearish. Okay. Again, I'm looking for a break though to confirm that, and I'm breaking that, right? Which would give me a look for a push down here. Daily chart. Here's our daily. Again, lots of sideways consolidation. Again, this could be a high and tight bull flag. And if we broke above 67.05, then we have no resistance till 69, almost a 200-point gap up here. If we can get past this old high, right? And we can also draw a trend line across the top there and look for a break of 65.81, right? But we're making lower swing highs and higher swing lows is really indecision, and I really wouldn't touch this until we can break out in either direction. Okay, could be, so be careful out there. All right, let's take a look at we got Kiwi dollar, NZD, USD. Usually the Kiwi kind of hangs around in the same direction as the Aussie, but here we see on our monthly chart, we have a very strong downward trend channel, moderately strong, right? And we can see it narrowing, though, with lots of support here in this 55.23 area, multiple hits here. But we also have descending highs, right? Our highs are coming down too, right? So we got this like descending triangle where every time we get a high, it gets the bears are getting pushed back, and they can't really advance. They're not getting anything for the pushback, right? And it's almost like Indiana Jones and the walls are caving in, right? And so if we could break below 54.89, then we can see this level back here. This is the old 2009 level, 49.04 come into play, right? That's what the monthly might come somewhere in between. There's some lots of empty space here, but 1, 2, 3, 4 times this thing has been tested. The fifth time this thing might break, right? There's a weekly chart. You can see that very strong. The trend strength, it says very strong. And you can get this indicator by going to indicators, go to adaptive trend finder. Julian Etcheb created it, and it's absolutely free. Put that on there and puts that trend channel. And I love trading the trend channels. Say trend channel fast, 5 times fast. Trend channel, trend channel, trend channel. You can't do it, right? All right. D. Here we go. Here's the daily. Here's our daily chart. We are at the bottom of a trend channel, and we have been rebounding upward, right? So, we might have a little bit of a rally. I would like to see a break of the trend line before we can consider shorting this. On the daily, we go to a 4-hour chart, and you can see we're riding that range higher, right? And we might look at and maybe put a Fibonacci from the last peak to the low, and we're sitting at the 38% resistance line there. So if we can break that moving average and come on down, we bearish this. So right now we're short-term bullish because it's kind of riding in an uptrend, but we're medium to long-term bearish given the strength of the dollar. Okay. Let's go into our dollar base pairs, right? USD, JPY has been on fire, on total fire here, right? Higher highs, higher lows, remove all drawings, and let's do this thing. And we can see a very strong trend channel, dating back to 2020, higher highs and higher lows. We hit the bottom of the channel right here in April 1st, 2025, and we are starting to make some ground moves back. Actually, we had a high of around 162.03. Looks like we're trying to head back there. We're at the bottom of the channel and with strong green candles heading up. So definitely looking at this is bullish, bullish higher highs, higher lows. Then we have our weekly chart where we just been week after week, new highs, new highs, new highs, new highs, new highs, right? Go down to a daily chart. Nah, it gets kind of wonky right here, right? This is where you lose your money, right? Where, if you buy the top, you got stopped out, right? And then you try to buy the top, you get stopped out. You have to buy weakness in a uptrend, right? Which is kind of hard to do. It's very uncomfortable to do. And if you want to find out how to do that, well, book a call with me and I can show you how that we do it and how we have laser precision entries in the direction of the trend, we pick bottoms. I know they say he who picks a bottom has a smelly finger, but we pick bottoms and make money, right? That's what we do. Okay. Dollar yen daily chart drop down to a 4-hour chart. And then we can see very clean chart using Hakidashi candles, 5/8 moving average, plus a 200 simple moving average. And you can see market map is very simple. We got a pullback against the trend, and I'm looking to get long here, maybe a break above 54.76 for maybe a move back toward 156.00. Whole number, round number resistance at the top of the channel. I am bullish. Right?
Bye.
Yeah, that's where I am on dollar yen. Love dollar yen, right? Dollar yen is my friend. All right. My daughter almost got named Yenny. Yenny, Yenny, who should I turn to? Okay. USD CAD. 8675309. Yenny. Okay. Dollar. Monthly chart. There we go. Dollar cat, it's just they call it the loony for a reason. It's loony. It's crazy, right? And we can see that fundamentals are weak for Canada. You know, Canada's getting hit by U.S. tariffs. Um, their economy is kind of falling apart there, and we can see that the dollar has been beating up on its cousin to the north. And we can see it at the bottom of the channel, and we can see we're at the 140.40 area. That should continue with a rising channel weekly. This is very clean, very clear. However, it's inside these candles is where you get messed up, right? Because if you try buying this and this thing drops like that, you're out, right? The wicks, the dollar CAD's a very very wicky, like wicked. It's wicked, right? It's a wicked, and so looking for extreme prices is the best way to trade this currency pair, right? Where it penetrates the low, right? And it's extreme. You get a nice move because if you try to trade anywhere in between, the wicks within the day will take you out. You go long and it will like stop you out, right? Like here, nice extreme candle here on the daily. You get that extreme move, you can be very secure getting long bullish against that move here, right? We don't have a real extreme here. And so I'd be bullish, but cautiously bullish, looking for some type of an extreme push, right? And here we're at the top of the channel, which means if we got long here, it'd probably drop before it went up. And look, that extreme there. Ooh, that's a thing of beauty right there. And we rallied from the lows of 1.3886 all the way to a high of 1.4142, over 300 pips. And so we would look for extreme moves in dollar CAD. So I'm medium term bullish, but short term, I want to stay out of this thing, but short term bearish, right? Okay. So you gotta be careful with this. Be careful with it. Okay. So we went through those currency pairs, and we want to probably go to. I wanted to check off on gold, XAU USD. That's been a big moneymaker for us, right? Let's take a look, right? Oh, that's XAU. Oh, what is that? All right. XAU USD. I got Singapore dollar. Like, all right, are we at 5,000 on that already? All right, here we go. Whoa, look at that. Look at that. We get her. So here's our move. This is gold. And gold's been my favorite thing to trade lately. I love gold. I just trade gold all the time. And that's what we traded last night in our Asia session trading. And you should join Asia Pip and Run trading. It's the perfect time to trade right after dinner. You put the kids to bed and you're trading, it's 7 p.m. ET, put the kids to bed early. 7 p.m. We trade from 7 to 9. Tuesdays, Wednesdays, and Thursdays for 2 hours. And it's the best 2 hours that you'll have all day, right? So here we are. I mean, we're at all-time highs. All-time high about the 43.86 we hit. We've been pulling back, right? And when I wrote Gold Rush Blueprint, we were stuck in this consolidation. And I had projected that we would get close to 5,000. You read some of the charts of Gold Rush Blueprint show this movement here, right? Go to a weekly chart, and you can see that we've been this powerful rally, right? Higher highs, higher lows, ultra strong. Look at the trend strength, ultra strong. Right? We go down to the daily chart, very strong. Trend annualized return, 97.8%. Yeah, and I have doubled a couple of accounts, doubled and tripled a couple of accounts trading gold. So this is not a lie here. um, our 4-hour chart, but see what's going on here. Higher highs, higher lows, but now we have a higher high, a higher low, but now we have a lower high. This is a structural, which is kind of like our head and shoulders, right? You got a shoulder, a head, and a shoulder, right? And so this is very critical. If price does not break 42.46, we can see a drop, a sizable drop. And I can show you how far this could drop using Fibonacci. Connecting the extreme high to the recent low to the lower high, we get a projection. The 100 usually you get a this is one equal wave. The distance between these 2 points and the distance between these 2 points are the same. That's 100%. That's 37.0674, right? And bear flag, flag pattern, flag pole. This is our flag, right? We have our flag pattern. Bearish flag, and we have the flag pole, right? It's upside down flag, okay? Don't make fun of my drawings. Okay. Okay, it's a hockey stick, okay? If you're from Canada, thank you. You get your hockey stick, right? And usually clone this like a sheep, clone it, and then take that, and then boom. So you take the flag pole, the height of the flag pole, right? Not talking about checks, but poles, right? Right. So maybe go a little like that. So that's 100% expansion. So this is even though we've been in this beautiful bull run, lower high is a red alert flag, bro. This is like red alert. We have a red alert sign here. There's all kinds of always like putting these little emojis on here, right? And usually find like some type of alert. You got hearts and things like that. But they should have they should make them searchable. Anyway, like skull and crossbones or something, right? Like warning sign. Anyway, I'm not gonna find it. Maybe. No. Okay. Okay, so let's look lower. 4-hour chart. And we can see this thing is like drooping. And we took this short, actually. I think we did. We took this short. We took a lot of shorts. We shorted it. We shorted it from here, and we took a ton of shorts. We spanked it, right? Okay. So here we go. 41.03 dropped it down to a 2-hour chart. We can see that we broke down to the 200 simple moving average. This is our channel that I drew. I don't have to draw those because this thing automatically draws the channels, so we can see we have a rising channel, but we're breaking below it, right? With gusto, right? And now we've got a little small body candle on a 1-hour chart. Again, a little bit of a rebound, but this is a break of the channel, and we could see a price maybe rally up against the bottom of the channel, right? Like it hits its head, it's walking up the stairs, falls through the stairs, and then tries to come up, and he hits his back of his head, and he falls down, and he goes, ah! Right? So we have something like that, right? 1, 2, 3, 4, and 5, and 39.07 will be coming pretty hot and heavy there. Drop down to a 30-minute chart. We can see that we're pulling back from extremes, right? And then we can drop it down to a 15, then you drop to a 5, drop to a 3-minute chart, right? And then you can see how this is a 1-minute chart, 15-second chart. This is where we kind of like live on this 15-second chart there, right? Nothing's moving. I guess it's Friday and nobody wants to do anything. Look at that. This, right. We might have a little bit of a rebound. You know, we broke the trend line here, and maybe we'll rebound. But anyway, we'll leave that. But we're bearish, actually bearish gold, medium term bearish. I might see a little bit of a rebound before the drop. Okay. So let's go look at the Bitcoin, BTC, USD. I haven't looked at that in a while. It's been doing some crazy things there, Bitcoin index. And oh my goodness, we are at 95,990 on Bitcoin. Wow, 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 wow. Look at that. Monthly chart. Again, just like gold, higher highs and higher lows, guys. And then boom, right? Because it's trading against the dollar. Look, BTC, USD. And I showed you the dollar index. The dollar index is getting strong. And so now, I mean, the trend finder can't even match this up. Weekly chart, look at that. Here's our weekly. We're falling out of bed right there, right? And we can take a Fibonacci on this and give us an idea of where the Bitcoin, or we're bearish this, right? So we can see, well, we're at the 23% retracement. Maybe we get a little bit of a bounce here, but the 38's at 83,136, right? And so we may come up for air for a little bit, maybe a little bit of a bounce before a sizable drop to retest the wave 4. This is 3, 4, 5. And then we're doing an ABC down. Typical wave 4 target takes us to 83,257.19, right? So we're definitely bearish on that. Okay, let's take a look at the indexes. Let's look at the NASDAQ, or the NQ, NASDAQ futures. And we can see that, we have been going higher highs and higher lows. Or we're getting a little bit of there's a little crack in the trend right now on the monthly chart. I mean, look at that. Higher highs, higher lows, right? This is screaming to the upside. But this is something we can do to kind of forecast what's going to happen next. You can take a Fibonacci expansion tool. We'll go Fibonacci expansion. Grab that bottom, grab that top, and pull back to the last low we had was the right. Wow, 28,904. That's a pretty big possible shot there. We still have some higher highs and higher lows built into this, but let's go ahead and go to weekly. Weekly chart's giving us a little bit of a pullback, though. It may just be a little bit. I mean, we get 1 day pullback or 1 week of pullback, and then expansion, 28,904. Yeah, we sure could. I remember when NASDAQ was 7,000, right? Look at that. Double bottom, and we can see a possible push. Double bottom here, 24,661, a tweezer bottom. Look for a break above 25,820 for a move toward 28,990. That's all. I am bullish. I'm bullish NASDAQ. End of the year, November is typically the strongest time in the market, right? The strongest time for the November are typically the strongest time for the markets. This is where the traders get the GI Joe for the Kung Fu grip. They're able to make that money, the Christmas bonuses and stuff like that. Let's go ahead and take a look at the SPX 500. 500 of the top traded stocks on the index. And we can see our monthly chart. Same, almost looks just like NASDAQ. Higher highs and higher lows. When you have lower taxes, we have growth growth policies. This is what you get. You get a very strong market like we got back in '85 after the Reagan Revolution. Big, strong moves. And it's all about the money, guys. I'm not a big about personalities. I'm about the money. And here we go. Weekly chart, higher highs, higher lows, getting some cracks here, but for the most part, this is solid, baby. Daily chart. Okay, this is where we start getting some breakdowns, right? Maybe some panicins, but long wicks, but and this was a full body red candle, guys. Full body. This was a full body red candle, and not green, but red. This was a full body red candle, and buyers stepped in, right? Buyers stepped in and pushed this up, right? So this was a full body red candle too, and buyers stepped in, right? So buyers stepped in here and here and huge. Every time this thing has hit the bottom of the channel, we've had lots of buying. So I'm looking for, we get a break above 68.17, we can see prices move a lot higher. Okay. So very, very interesting moves there. So I'm bullish on the on the S&P 500. I am bullish. All right, let's take a look at one last thing. We'll look at is oil. We'll take a look at the U.S. oil, West Texas Intermediate, and oil has been, after the Middle East, settlement peace, the Middle East oil premium has usually meant some type of war or something like that, some refineries being attacked or something. But with peace in the Middle East, we're not seeing that. We're seeing a little slower growth in China, and also not global demand for oil maybe a little bit lower, right? Then we were not seeing. We're just seeing this base here, monthly chart, not really double bottom though. It is bullish. We're at an extreme. We're at an extreme, almost Fibonacci. Remember when oil went negative? Oil was actually negative. They're paying you to keep it. Now, we're sitting at 50% retracement, and we have a downtrend channel bouncing off support. I'm actually neutral on the oil, but with all this support coming in here, I'm actually short-term bullish, right? And if we look back a little bit, we're just basically stuck in a really big range with an extreme move below 28 and a high like in the 120s, and we're right smack in the middle of that. Anyway, I want to thank you guys so much for joining me for the coffee hour. I hope you found this helpful. Give me some thumbs up, some likes, and if you are interested in our Black Friday sale, I'm black and it's Friday, then go ahead and message me and say, hey, I'm interested, or something in the DM me. You email me at greg@elitetradersu.com and let me reach out to me, and then we can talk and see. I know I definitely can help you become a professional trader in 90 days or less with my process. It's been proven. Been doing this for a long time, and I look forward to making you my next success story. You guys have a great weekend. Talk to you later. Peace.